Hello, it is Ed Butowsky with Chapwood Finance, and I'm honored to have Axel Merk with us today. He's the president of the Merk Funds. And Axel, I've watched you for many years, and you started your firm in 1994. You're one of the foremost experts in currencies and really giving an understanding of what is happening in currencies around the world today. And what I really like to do with Chapwood Finance is explain to people how it applies directly to them. So you grew up, I guess, in Switzerland. Is that true?
First in Germany, then in Switzerland, yes. And the reason we drifted into currencies is because we didn't really like anything else anymore. We actually used to focus on fundamental analysis in high-tech companies. But then as the bubble built and we had to get more global, then more macro, then a decade ago we became more cash and precious metals managers. And so that's how we drifted into currencies. And that's also why we have much more of a macro perspective than your typical day trader in currencies that mostly worries about the carry trade.
Well, I absolutely love currencies. I love managed futures. I love finding investment categories that don't go all up and down with the overall market. And that's what I love about the Merk funds and the investments that you do, because they're non-correlated. And part of the reason I wanted to interview you was to get your perspective on currencies and what's happening around the world. And also, I would love people to take a look at your fund. This isn't a promotional video. You're not paying me anything. But I think everyone needs to have some exposure to what you do. So having said that, Axel, right now everyone's talking about Europe starting to become inflamed again based on what happened in Cyprus. Talk to me a little bit about your concerns and your thoughts about the currencies around the world, and where are some of those little problem areas that could become really big problems?
Sure. Well, you mentioned a bunch of issues. First of all, let's keep in mind currencies are not as volatile as people think they are. When the euro moves a full cent from 130 to 129 or so, on a percentage basis, not much. Now, secondly, the reason we love currencies because it's the purest form of expressing one's view of what policymakers might be up to. You may not like what Obama, Merkel, Bernanke, Draghi, and others are up to, but we think they're predictable. And if the only reason, for example, you're buying US stocks is because of quantitative easing, you're taking on a great deal of noise, whereas you can do that very explicitly in the currency markets. Now, with regard to Europe, the euro has been in the news again because of Cyprus, this tiny island of 1.1 million people. And the question is, why do we bother? Why do we care? Well, we would care if there was this so-called contagion. Clearly, there's been this very bad precedent set that they want to raid insured deposits. In the US, we have a comprehensive framework. We have an FDIC-style insurance framework. And if you have over 250,000 in an account, you know your money is at risk. Well, in Europe, you have a patchwork of regulations, and they seem to interpret it differently in every single country. So that's really the worst coming out of Cyprus, and that's why we should care. Beyond that, though, Cyprus is a tiny, tiny place. Spain had a treasury bill auction the same day that the parliament votes down the bailout package. And guess what? Spain just paid the lowest yield on a treasury auction it has paid since 1991. Really? So at this stage, anyway, the contagion is rather limited. Yes, 0.285% on T-bills. So what's happening is that whenever you have a new crisis, first you sell everything. Well, over time, the market learns to differentiate. And so right now, you probably don't want to have your bank account in Cyprus. The question, though, is it just as bad to own a German T-bill than it is to own the euro in a Cypriot bank? And so where we come in is we try to interpret what's going to happen here. And while we don't love the euro, everybody else hates it, so there might be more value in the euro than other places. And if we take a step back and look at the bigger picture, the European Central Bank is actually the only central bank around the world, or the major central bank, mopping up liquidity. Everybody else is printing like crazy. The Europeans are mopping up liquidity. So if you take the two together, the euro being the most hated currency, they are mopping up liquidity. Well, there just might be some value. I'm not going in there as far as saying, hey, mortgage your house and buy the euro. But you've got to be able to be a contrarian and value investor at times, and clearly you'll get burned at times as well.
Now, the euro might be strengthening relative to the US dollar, correct?
Well, not in recent days, that's right, for sure. Yes. But yes, over time, ever since last August, the euro has been on an upward trend that might have been broken. We turned positive on the euro in early August after we published a piece, or we published a piece because of that, that's called Draghi's Genius. And what Draghi basically did is he imposed a framework on the Eurozone how to move forward. There was no framework. There were just headless chicken around. And it wasn't a particularly good framework, but at least there was a framework. We don't have a good framework in the UK, the US, or Japan either. And so we saw it in that sort of context. Now the question is, with what's happening in Cyprus, are we back to where we have these headless chicken in charge? Right. And that is something that remains to be seen. In a typical Eurozone fashion, what is happening, you have a crisis to shake policymakers. And by the way, the European Parliament just passed a bill to actually enable that central bank regulator to take place. So they're taking a step forward just as they're taking a step back elsewhere. Now, you mentioned in the context of the US dollar, yes, clearly that's what we're looking at. And in the context of what's happening around the world as well, let's not forget what's happening in Japan, the UK, and Canada, and I'll be glad to get into that as well.
Well, when you start looking at the United States, one of the things that we talk about is the printing of money is devaluing our currency. Well, if in Europe they're devaluing their currency by printing of money and Japan's devaluing their currency because of that, where does this end? And is that actually happening? And I have no problem with you making me look like a fool in this interview, okay? So if I say something that isn't right, jump all over me. But I always have had the belief that we are devaluing our currency at such a strong rate that it's making the goods that we're buying from outside the U.S. a lot more expensive. Is that true?
That is correct.
Okay.
We have the better printing press than much of the rest of the world. I say much of the rest of the world because there are clear cultural differences in different central banks around the world. And you always have to watch what policymakers do versus what they say. The Bank of England has been printing more money relative to, I'm always doing this, relative to August 2008 when the crisis began, than the US has. But if the Japanese, for example, that have this very dovish reputation, they recently announced they're also going to print $1 trillion. Well, their trillion is on a gross basis. Our trillion is on a net basis. So the Japanese haven't done anything yet. But don't worry, that's about to change. Yes. In contrast, the very reason why the Europeans have their problems is because they never printed as much money as the other folks did. That's why these problems showed up. Then Draghi came in and offered this 1 trillion euros in long-term refinancing, the LTROs, but those are being paid back now. The Europeans have a demand-driven balance sheet. It's not the central bank in charge of how much money is being printed. The banking system has much more control over it, and they're handing back the liquidity. And so what's happening is truly the Europeans have printed a fraction of the Americans have and are mopping up liquidity. Now, again, I'm not saying everything is great in the Eurozone, but one has to see those sort of things in context. And then you go up to the UK, where in recent weeks, the balance sheet has come down a little bit, but Osborne is about to change the mandate or give flexibility to the mandate of the Bank of England. Well, the only reason he's doing that is because the current head of the Bank of Canada, Mr. Carney, is going to become the head of the Bank of England, and almost certainly he is the one who requested it. He wants to change the inflation target. He wants to introduce nominal GDP targeting. So yes, we'll see a lot more money printing, but there are different moves and different policymakers around the world. And I don't think it's just a race to the bottom. I think you can add value with active management. We have done so over the years, and I think that there's a good opportunity to go do that again going forward.
Well, as we conclude, because I really appreciate you taking the time, and I don't want to take too much of your time, but I do want to ask you this question. I have been telling clients, and again, if I'm wrong, you tell me, but I don't believe that Europe can get fixed by just printing money. I think they also have to take some austerity programs because I don't think printing of money fixes anything. Now, what do you say to that?
Well, the only language policymakers understand is that of the bond market. If there's pressure from the bond market, policymakers act. You see the case of Cyprus again. Market pressure is what's policymakers to act. Now, compare that to what's happening in the US. The bond market is giving us a free ride, so we're not engaging in any reform. We may have to wait. I'm convinced we have to wait until the bond market pressures the US to engage in reform. Well, the difference between the US and Europe is that we have a current account deficit in the US, which means we are far more vulnerable to a misbehaving bond market. In the Eurozone, when there's panic, the money goes from the periphery to the core, from the weak countries to the strong countries. That trend has been in reverse since last August. And so in the US, if and when we have the same problem, well, we will fix our problems, but if our interest rates go up, we cannot finance our government deficit as interest rates move higher. We cannot do what Volcker did in the early 80s because there's so much more debt in the system, and the government debt in particular. And so I would agree with you, the Europeans have no chance of outgrowing their problems. In the US, we think we do. I don't think we have that either. But in Europe, it's crystal clear we cannot do it. And indeed, the debt ratios and all these ratios are much better in Europe. What they miss in Europe is the structural reform. When they have high youth unemployment, it means they're discriminating against the youth. They're protecting the jobs of the old and allowing to have the youngsters be kicked out. Well, guess what? They have high youth unemployment. Brussels just accused Germany of wage dumping because in Germany there's no minimum wage. Well, guess what? Unemployment is comparatively low in Germany. Things are working there. you need more structural reform in Europe, but policymakers back. And the euro is doing fine, but the economies in the periphery are not doing fine.
Well, I think they call that stagflation, and I think the whole world is in stagflation right now. But Axel, I really appreciate you joining us. Anybody who wants to learn more about you, I'm sure they can find you on the internet with Merk Investments. You're a real pro, and I look forward to having you back at chapwoodfinance.com real soon. So thank you very much.
My pleasure.